Hi, this is Jim Romer. More about commodity trading. We actually have special software that watches weather patterns thousands of miles away around the world for grains and soft commodities like coffee, cocoa, and cotton, and things like that. So, a little bit more about the markets. The fundamentals that move commodities in grains and coffee and cocoa and markets like that are agriculture. Weather's a huge driving force, as well as the Brazil real and the US dollar. Fluctuations in currencies affect exports and markets, and we monitor that in many countries around the world. Of course, shale production, weather, uh, what happens with OPEC affects natural gas and crude oil, and of course, domestic and international relationships are very important to many commodities produced from Australia to Brazil, Europe, and of course, in the United States and Argentina. Who trades commodities? Most of our clients are farmers in the Midwest, corn and soybean producers in Australia, in Canada, as well as also oil and gas refineries. They want to know about weather, whether there's going to be a hurricane coming, how it's going to affect the natural gas market and production. Meat packers also. Hedge funds invest and diversify in portfolios of commodities, particularly ETFs and ETNs. Very conservative versus futures and options. So you can trade that with an account at Fidelity or Charles Schwab or pretty much anywhere else where you have a brokerage firm. Now, commodities can be very, very volatile. What you don't want to end up seeing is something like this. This poor soul, after the British pound collapsed with the Brexit vote, look at what happened a few years ago. How do you mitigate that kind of risk? That's where we come in to advise you to use options and ETFs and things like that. Some of the big moves in commodities, there are many of them, but here was the drought of 2012, for example. There have been many more moves since then. Corn prices spiked 30 to 40%. Look at that drought, the dry area in red in the Midwest during 2012. During that summer, it was very, very hot. Look at the Midwest. And natural gas prices spiked as well. Hot summers increase demand for natural gas. Droughts affect grain production as well as other commodities around the world. So, hope you join us. Look at Weather Wealth and Climate Intelligence, two newsletters we have to help you navigate waters and commodities and to profit potentially in many markets from grains to soft commodities as well as in natural gas.